You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back. Today we're talking about mortgage rates and what's happening in the industry and how we've seen mortgage rates go up 0.5 point in the last 30 days and what that really means to you as a consumer and what are your opportunities out there. And I'm not really sure that we'll see another 0.5 point increase in June. But I would say that we were all surprised that we saw that kind of mortgage rate increase in the month of May, and it was consistent throughout the month. It wasn't just a one-day blip. I mean, it just gradually has been rising over the last 30 days, and that's a little bit of a surprise to all of us. Although we're seeing the stock market take a really good run, and those two are intertwined somewhat because the liquidity or the money for mortgages really comes from you, the investors out there. So basically what's happening is your advisors are telling you, hey, take your money out of bonds, put them into stocks because it's going for a ride. And so what's happened when the money leaves the bond market, mortgage interest rates go up. So that's what we've seen over the last 30 days. I don't know how long that's going to last, but what I will tell you is that if your interest rate is over 5% today on your mortgage, there's still a lot of options out there. And I talk to people every day, and we do a really good free financial analysis for you. And what we'll do is we'll take your current note, we'll take how long you've been in that note, and we'll put in, some different options for you. And we'll send you a good graphical presentation of what this financial plan is for you. Now, let's remember, your mortgage is probably one of the biggest financial vehicles that you have. And, next week, we're going to start talking more about financial planning and what you need to do. So make sure you tune in next week as well, because we're going to talk about your personal finances. Part of your personal finances, obviously, is your mortgage and how you handle your debts and how you structure your debts. That will affect your cash flow and what your real expenses are. Because I always say, why pay more on an interest expense than you have to? I mean, the interest rates out there right now are still extremely low. Bankrate.com put out there that the average mortgage rate, now this includes FHA as well, so it covers all of them. So we were at 3.52 on May 1st and now 3.99 on May 29th, so that's about a 0.5 point jump in interest. So what I'll tell you is, let's just give you an example. If you're in a $300,000 loan right now and you haven't got around to refinancing and maybe you're at 6% and we can refinance you today, say at 4%, that's a savings of about $4,392 a year for a phone call. Now, what I'll also tell you is that a lot of people are nervous about, well, I'm self-employed, rules have changed, I don't know that I can qualify. Well, I've been in this business since 1999, and one thing that I can tell you is that I've been self-employed myself, and I know how to read a self-employed tax return. And there are ways to look at that tax return and do it properly and do the income calculation to where you can qualify. So you got to get with a trusted advisor, someone that's really knows how to do this business, and they will be able to help you if you're self-employed. We do a lot of self-employed borrowers, doctors, professionals at our office today. So one of the things that really would advise you to do is, if you have not and you're over 5%, jump into this market right now. I mean, this weekend, give us a call, 214-643-6021. That's 214-643-6021. That's my direct line to my office. I'm not there right now, obviously, so just leave me a voicemail. I will get back to you and personally take care of you. So what are some of the reasons that you should refinance? And what I would do is really take a hard look at it. And what I also advise my clients, I really get into, if you're thinking about refinancing, one of my first questions is, how long are you going to stay in a house? Because there is a cost associated with it, and Bankrate.com reports that it's around 2% on a national average to refinance your house, and that includes your title policies and all those things that need to get done, or maybe even buying down your rate, which a lot of my clients I have seen lately have decided to go ahead and buy down their rate now. There was a time when I really didn't advise it that much, but we're so close here. It depends on how long you stay in your house. And what I do is I go through a calculation for you. And what you should do when you're looking at refinancing your house is what I don't like is some lenders out there don't give full disclosure up front. And so what you need to ask is, okay, what are my total closing costs? Don't take into consideration your escrow setup, your savings for your taxes and your insurance, because that really is your savings account. That's not a cost. That's just your savings account moving from one bank to the other so that they have the money to pay your taxes or insurance at that time. A lot of my clients also don't escrow. So the rules are, as long as you owe less than 80% of the appraised value of your home, you're not required to have an escrow account. So some people like to save their own money in their own bank accounts for their taxes and their insurance, and we let you do that. And there is a little small fee, to allow you to set that up, because what they do is that there's a risk associated that if you don't pay your taxes, then they have to go through a bunch of paperwork and things and try to set up an escrow for you later. So there is a small fee in a lot of cases to allow you to do your own escrows. What you want to do is you want to look at what is the actual cost, points, fees, title fees. If you've refinanced in the last few years, the state of Texas gives you a discount on that title fee. But in average, if you can use 1% to 2%, it's probably a good number to look at. And then you want to look at how much you're saving every month. And what we provide for you as part of this financial analysis is what I call a break-even point. And that break-even point basically takes that cost and you divide it by how much you're saving each month on your new mortgage. And it's pretty simple math. What you want to do is look at it and say, okay, if my break-even point is 15.5 months and I plan on being in the house 16 months, then I win. And so those are the kind of things we go through. You also want to take into the fact that you can actually, if you time it right, you can basically skip 2 months mortgage payment. And that's a technique that I use a lot for people, that when you look at the cash flows, we say, okay, as long as we pay off your loan before the 15th of this month, then you won't make this month's payment. You don't make next month's payment. You actually go 2 months without making a mortgage payment, which really helps people, I think, especially on some of the streamlined refis. For FHA, for example, where they don't allow you to roll in your closing costs into the new loan. But so you've got to bring that to closing. So what we do is we try to work it out to where you're bringing about 1 month's payment to closing, and then you skip a month. So I'm getting pretty technical on you. I hope I'm not confusing you. But what we can do, if you call our office, we'll put this all in paper for you so you can get a real good view of what's going on. The other advantages that you might see today is in the Texas market, we saw a downturn of the housing values around 9%. And which was one of the lowest in the nation during the meltdown. So you've also heard us talk about on the show that we've also seen an uptick in values. So I think we've already gotten back those values that we're back to where we were in probably 2007 in the home prices. So now if you've got equity in your house, you may want to look at your debts, look at the credit card debt that you have, look at the car debts, all those things. Take advantage of this really low interest rate, roll everything together, because the state of Texas allows you to go up to 80% loan to value. That means that if you have a $100,000 home, you can borrow $80,000 against it. So you want to look at the debts that you have, add your mortgage in there, figure out if you can consolidate it all. It's amazing. I saved a guy last month about $2,000 a month on his total debts, because what we did was we refinanced the house, we paid off some credit card debts that were at extremely high rates, and it really, really worked out for him, and he was really thrilled, he and his wife, to get in and save $2,000 a month. Plus, they skipped a couple months' payments because the way we timed it, and we closed it in the first week of the month, paid off their loan before the payment was due, and then we skipped another month of payment. So it really helped them get a quick reset on their finances. That's a strategy we use. The other thing that you can do with refinancing is you can actually, we're talking a lot about fixing up your house. A lot of homes in the Metroplex right now are outdated. There's been some big changes in what people are expecting when they buy a house, when they walk in. So one of the things that I advise in a lot of cases is, okay, let's look at the kitchen and bath. Those are the biggest areas. We've had some remodelers on the show. We're going to have more in the next few weeks. You'll have to tune in for them. They'll talk about how they can come in and transform your house from outdated to updated in a matter of weeks. And what you can do there is just go ahead and take that cash out of your house, pay that, or we can do it as a mechanic's lien, which means it's not a cash out, it's just a home improvement loan. So there's a lot of techniques we can use in the financial world, vehicles that we can help you out. Get your house updated, put a pool in, do those things that you've been wanting to do with these rates being so low, because they are not going to last that much longer. You're listening to Real Talk Texas. I'm Steve Hakes. I'm your host. I'm with Affiliated Bank here in Dallas, and it's my pleasure to come and talk about the mortgage industry. And when you're ready, if you're listening and you really need some advice, I'll give you my direct line. My direct line is 214-643-6021. That's 214-643-6021. I'll give you the facts, and you can make a decision. I'm here to help you out, and basically I can give you advice on what's happening in the market today, as well as what you should do to help you and your family. So stay tuned. We're going to talk more on the next segment about buying a house and some of the strategies there that you want to do on a financial perspective. And if you're selling your house, some of the really things to watch out for. I got a call from a realtor last night. I want to share that with you in the next segment, so stay tuned. Real Talk Texas on KLIF AM 570 News and Information.